The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to have a special guest today at the first break. The Wolf Trader himself, Shane Smolian, will be our guest, and he is going to bring us a lot of information today that I think you're going to enjoy. We'll take a look at the FTSE chart, 60 minutes. You can see that over the last 5 or 6 days. We had that big run up on April the 3rd. You'll see we went up and hit 58.40. We made a beautiful ABCD to the downside. I don't know how they make this stuff up, folks, but they seem to do it, and it's held so far pretty much spot on. The next one we're going to take a look at is the German DAX, and we're going to look at that on a 60-minute chart also. We'll get this up here so we can take a quick look at it. This is interesting, but I want to show you something, a variation of this, folks, that's very important if you trade with Fibonacci numbers. I was looking at a little bit of a different chart. The reason why it was over a time frame, it was a 15-minute chart that went all the way back to March 24th. And if you would look at this one a little closer, you'd be able to see that there's two ratios up there. You see the 1.27 expansion there on the far left in the red box, and you see the 1.618 expansion there in the middle. That came in at that 105.80 area. And then you can see we've sold off what we just showed you before in the other chart. So that's what you do is when you're looking for multiple ratios, that's what you're trying to do. People have asked about the little sell-off that we've had in the bonds. You know, we hit that really critical level at 182.16. And we backed off 4 handles, so that's a pretty good move down in these environments, considering that the bonds are swinging $3,000 and $4,000 a day, just like everything else. And this is not going to last for a long time, but let's hope it lasts for a little bit longer, because it's we don't see swings like this. We're seeing monthly swings that happen intraday, which is very, very unusual. Okay, now one other one I wanted to bring to your attention, that is the gold market. We've been watching that gold up at the 1740 level. We got to 1742. We backed off $70. That's $72. That's just twice the harmonic number of 3468. That gave really strong support there at the 1678 level. And so that would be very, very important to watch it. But the key level to watch, folks, is 1700. If we can't get above 1700 in the next day or so, that would be a very negative sign in the gold market. And the other thing about the gold is that it was this is what it was scheduled to do this morning. This was before the market opened, and shows you what it was doing, over the European session. We were down there at that 1674 level, and we had a heck of a rally since that time. But whether it continues or not, we'll just have to wait and see. Now, the phone number, if you'd like to call in, is 877-927-6648. Now, I've had several questions about the hog market. Yes, the hogs have been up the limit a couple days in a row. Folks, that's just a oversold condition. Now, that might be the major bottom in hogs. It might not be. It was just showing that the market was extremely oversold. Same thing in cattle. And so we'll see whether these things, if you're in the hogs, put your stop at break even and pray for the best. That's about all you can do. But these are really wild times. I want to talk just a second about the open interest. The open interest yesterday, with that big move in the S&P up, dropped 1% in the S&P. A 1% drop in open interest on a big up move. And you have to consider that almost all day it was up except for the last hour or so. And so that's why you have to pay attention to that. In fact, all of the stock indices for the indices were dropping in open interest. In the gold market, the same thing. We had a drop in open interest in gold and a drop in open interest in silver. So we do have some, buyers that are not in there. Now, that's important to me to look at that because, open interest is, for every buyer, there's got to be a seller. And if you don't have buyers showing up and you don't have sellers coming up, then that's it. So we'll see what's going on. Okay, so Dudette is selling short at 226.78, risking small. Her stop is 2678.25. Is that about right, Maria? $12.50. Joking. Should never joke about stuff like that. Not fun. I imagine she risks about 5 points. That's about usually all you have to do. But in these markets, I don't know how you can trade that S&P for 5 points. I think you've got to give it at least 10 and probably 15 because these swings we're having. I mean, we're having weekly swings now in overnight. Look at it. We went. Well, you can see how high we were yesterday, and the 61% retracement back here. Let's just get this up here, and I'll just show you what I'm watching as far as the we're looking at here in the Dow Jones. Possibly is if we were to get this. Scale in and out. No, I don't do that scaling. Scaling's for fish, David. I don't really do that. What I do, I show you folks that you see the stuff that I do. I mean, I look to put a position on and try to make some money on it. And when it's done, I go on to the next one. I operate, folks, I operate a little bit of a general store here. Some day I've got pork on sale. Some days I've got wheat on sale. Some days I want to buy the heck out of ethanol, so that's really what I'm trying to do, to give myself an edge, and that's what the patterns do. They do three things for you. They give you an edge that's quantifiable. 2, they're predictable within limits. And 3, they repeat over and over again. Those are 3 factors. You don't get those in any other gambling event. And this isn't gambling. This is intelligent risk speculation. So that's the real difference of what we're doing here. In a gambling event, it's based on the house taking a cut. It starts with the toss of the coin, the flip of the coin, the toss of the ball, the spin of the wheel, the roll of the dice, turn of the card, whatever it happens to be. That's how it starts, and you can't change it until it's over. With us, we can do whatever we want. That was from, I believe that was from Jesse Livermore during the thing. So we'll see whether that's right or not. But we will have Shane coming on at the break, and he's going to have some good stuff about the Federal Reserve, and we'll be able to look at that. Believe it or not, folks, Jim Twentyman's brother, Mark, is still hanging in there. He's been at death's door now 3 days in a row, but he's hanging on. He comes in and out of a coma, but the medicine that they've given him, that hydrochloroquine and the zithromycin, seem to be helping him a little bit, but he's still with us, and I certainly sure hope he makes it because we'll see. All right. Well, thank you, Z, about that, about the old Dennis Reagan stuff. Yeah, he was an unusual man. All right, let's move on. If anybody has any questions, we got the break coming up already. Shut the front door. We're going to have Shane coming on, and we'll be able to make sure that he's on to take a look at that. So that's pretty much it. We'll take a break. 877-927-6648. Stay tuned for the Wolf Trader.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have Shane on the line, the wolf trader himself. Shane, how are you doing today?
Good morning. Is this Duke and Duke?
This is it, the offices of Duke and Duke, 100 South Broad Street. Hey, listen, we're going to turn the microphone over to you, so you've got some great stuff to tell us, so why don't you take over, and we'll be taking notes, so go right ahead. Folks, if you want to call in, it's 877-927-6648. Shane, take over, please.
Thank you so much. I'll just start out here by telling everybody how they can reach me. It's www.wolftraderfutures.com. It used to be wolftrader.net, but it's now wolftraderfutures.com, and then the Twitter is at wolftraderfutu1, and that's the free Twitter, not the gold member, but the free Twitter. So we'll just start out there. I want to start out with the Fear and Greed Index. So this is on CNN. You can find this on CNN. It's listed on their website, and we're still at a very low reading, relatively low reading at 26. Now, in the past, that would have been an extremely low reading, but we got down to values of like 1 or 2 down into here. So on a relative basis, that's actually relatively high compared to where we've been in the last couple of weeks on this market. So you can see 1 year ago, we were at 74, which was very high. I think the highest approach we just saw right before the decline was in the upper 90s. And then a month ago, we were at 7. And then we're just kind of hovering around this 25 to 28 level into here. So still relatively low on the big term picture, but off the lows that we've seen. And this next graph is the fear and greed over time. So you can see that right before we had this big plunge, this was right into near the first of the year, we were approaching these all-time peaks into here on this index, and then it plunged all the way down to an all-time low down into here, and now we're kind of coming up into this area. So that gives you an idea of just the extremes that we've seen on this index. So I normally don't trade off of a fear and greed index, but it's interesting to note when we hit these really, really extreme values that it's definitely worth taking a look at least and factoring that into the overall picture. So let's do a Corona update. Everybody's favorite topic here. Corona update time. So the global cases have just crossed 1.4 million, and the deaths are at 82,000 right now. So that's where we stand, and I'll show you a graph in a minute. The U.S. cases are 400,000, so you can see that we're a pretty big chunk of that, a little bit under a third. The deaths in the U.S. are at 13,000 now. So they projected those deaths to be at 100,000. So not really sure if we're going to get there. If we're approaching a peak now, that curve tends to look like this when it's flattened out, and when it's not flattened, it peaks earlier like this. So if we're approaching a peak and we're at 13,000, I mean, we'll see. I mean, it's not clear that we're at a peak, but if we are at a peak, hopefully those numbers will come in under the 100,000. The Wuhan lockdown is lifted. So I'm going to show you a chart in a few slides about how that looks and where we could be on our time span, our timeline compared to Wuhan. And New York City is possibly near a peak. So I say possibly because this has been a pretty tricky virus to figure out, and some people are coming back and testing positive a second time, and so I don't want to say we're at a peak yet, but there's some signs, some small signs that we could be getting near a peak. So that's good. And now this is the actual corona cases here. Now I model this on two different ways. This first one is a fourth degree polynomial, and that's this red dotted line here. And then the actual dots that you see, the big bold red dots, that's the day-to-day plot. So there's two models here. There's this fourth degree polynomial, and then there's this third degree polynomial that we're looking at here, and that's the blue line. So you can see that in recent days, there's a little bit of a jog over. You can see over to this blue line here, which is good. And that could be the indication that we're starting to see a flattening, but it's too early to say for sure. But that's good because we don't want to see it jogging out this way towards that red line. So at some point, this will flatten and we will recover as a global economy. And I'm going to show you a slide that illustrates that in a couple slides. It's a three-dimensional slide. This is the global cases here. So we can see that there are, the biggest concentration is still here in Europe, Saudi Arabia. And we know, of course, China has outbreaks, but their death rates are dropping. And then, of course, our epicenter here is New York City, which is containing the bulk of the cases. And, of course, New York City is such a compact area. Everyone is living in very close quarters. So that's not surprising that it's there. So next slide this is just a graph here of the global cases. So this is the total confirmed cases. This is the total recovered, and then the total deaths. So the deaths are relatively low, but they're still 10 to 15 times higher than the flu. So this is no joke. I mean, everybody knows of somebody who's been affected or has died of this virus. There was a parent at my daughter's ice skating rink. The girl used to skate there. She doesn't skate there now, but he got the flu and he died. So, or the coronavirus, and he died. So this is a serious thing, and it's affecting everybody knows of people that are affected by it. And you talk every day about Jim Twentyman's brother, and that's, we're all praying for him to come through too. So, hopefully he makes it, and hopefully those drugs can do some good. I want to comment about that because people, come down on those drugs and say it's not proven, and there's no, how can you say that, and how can you give a drug that's not proven? But the point is that, when you're in a situation like this and it's dire, you don't have time to sit there and run trials for 2 years to say, well, this works, this doesn't work. And you have to look at the costs and benefits and the side effects. So I don't know if that's really a fair thing to say that you have to, it's not proven. And, why would you say something like that? Because at this point in time, like I said, we don't have the time to do that. So it's really a patient decision. They need to look at the side effects of it, but it seems like the malaria drug is helping some people. So I don't think that's a fair thing to say. So just pointing that out. Now, this was the graph. This is the one that's really cool. This is a three-dimensional graph. So take a look here. Now, what this looks like something from outer space or that you'd see on a NASA flyer, but it's really not that complex. What's going on here is if you look down here, this is increases or decreases in death per day. And what happens is on this graph, it spirals up. So for example, the blue graph here, I'm going to look at this one. This is France. You can see that as it starts here, you can see it spirals back and forth, okay? And then all of a sudden during the outbreak, that there's many more deaths per day, and then it starts to flatten out and it starts to actually decline into here. So what's happening here is you can start to see this lifespan of this virus on different countries. And you can see here, this is as of April 4th, so this was over the weekend, but you can see that it's starting to flatten out, and that's a good sign. So in France, you can see there's actually a decrease now in the deaths per day. In the United States is actually starting to, like, we're plateauing. Some days we're more, some days we're less, but we're kind of in this plateau now of this graph.
Back with Shane Smolian, folks.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Shane Smolian, thewolftrader.com. Shane, you want to continue, please? Shane, before you start, we have a question for one of our listeners. Do you have any idea how to estimate whether China has actually given us good information or bad information? We hear a lot about that in the news. Do you have any comments on that?
No, there's no way to know, unfortunately. So, yeah, that's a quick answer to that question.
Okay, thank you.
So, getting back to this chart here, the significance of this chart is that the point of this chart is to show that when the lockdown goes into effect in 2 weeks from the date, that's when the flattening of the curve starts here. So this curve flattened 2 weeks. The lockdown started 2 weeks before this in New York City, and this flattening into here began 2 weeks before this April 2nd peak into here. It flattened out. And now the next slide, it shows a similar thing. So these lockdowns do help, and this is all data here showing you. This is Germany, so the same thing. On April 3rd, the lockdown happened 2 weeks before this. So in other words, it would have kept spiraling out of control like this, and then the lockdown stops it. Now Wuhan actually spiraled up. Then there was the lockdown. The lockdown happened actually on that one. The lockdown happened earlier than 2 weeks, but it flattened out. And you can see that it actually spiraled back down to zero. So Wuhan has actually done this full recovery. So this is a good roadmap map to show us that we are going to get out of this, guys, and we're going to come out stronger than ever. And I really believe that. I think the U.S. Workforce is rested and people are ready to get back to work. So this was the astrological point that I was talking about that affected the world. And this Saturn, this is the Aries point. So I mentioned this before, and I actually I spoke with Alfie, the creator of the software, and he was able to do this upgrade so we can now plot this midpoint, this Saturn and Admito's midpoint, as it transits back and forth across this Aries point. So for subscribers, I made a video talking about that. So I think that that's going to give us a map into major highs and lows in equity markets in the coming months. So I talk about that on the website. There's a video in the members area, and I'll be talking about that in the coming months on your show. But in essence, this chart represented, this describes stagnation disease shutdown. And when the sun passed over this, right around that March 21st date, this is when the sun goes into Aries on the tropical zodiac, that literal, if you look that definition up, it says the day of the low, the day of the standstill. And that so far, that's been the lows, like right around that 321 area. I think it was the next Monday, but those have held. So I think that's fascinating that this picture actually describes what's happening in the world. And keep in mind, these are very slow moving aspects. This is not something that hits the chart 10 times a day or 10 times a week. This happens ultra rare. And it was exactly on the Aries point, which is the world. So just want to point that out. And then this is the chart right now of our current radix chart. The moon is in the third decan of Libra. And the reason that's important is because in this month, on the actual lunar cycle, this last month with the decline actually reshaped the lunar cycle. So this whole topography has changed just because of the last month. And so now we're coming off of this high. So the lunar cycle is showing just like a little dip here for the next couple of days in terms of the astro aspects. But the problem is that the Fed use is so strong that it's having a hard time going down now. Now I want to talk about the Fed. The Fed has had this $82 billion purchase days. The peak was $82 billion, and that was on pace to hit that QE1 target within the first month. But the thing is, when the market started to rally, this is when we had that biggest 3-day rally since the Depression. They started to pull back because they've got this now a little bit under control. And so they pull back to $31 billion a day, which is now a fraction, almost a third of what they were doing. So these are huge fluctuations in what the Fed is doing. So what does that mean for us in the trading? Well, the problem is that when you're looking at something like the bond, that because the Fed is now such a big player in this market on a day-to-day basis, that it's affecting the bond prices. And these bond prices, you cannot look at the price alone and trade these bonds because you have this Fed coming in and out, in and out, in and out, doing this. So I now have developed a Fed juice for the bonds, and this is huge. I just developed this yesterday, and the idea is that the Fed juice should directly impact equities and the bond because the Fed is purchasing the bonds. So these recent QE purchases have affected the bonds. And like I said, these fluctuations go from 81 to $31 billion. So that's a huge swing. I mean, if you think about 81 billion, I mean, before when the Fed was doing this, a big day was 5 billion. So now it's 81 to 32, and this is definitely affecting price. So this new bond Fed juice should model the bond better. So let's put it to the test. Let's see how the new bond Fed juice does versus the MACD. And so what I have here is I have a chart, and I'm going to explain this to you. Hopefully it's relatively simple to see. But I have these lines, these red lines and these yellow lines. And so the yellow lines represent the MACD, which is just price action, and the red lines represent the Fed juice. So if you go back to these points A here, point A here on the yellow line, this is the old MACD, just looking at price. You can see it bought here and it sold here, okay? So it bought midway into the trend and it closed out here. And so that trade was more or less, it made a little bit of money, okay? But it was more or less flat. But if you look at the Fed juice, take a look, it actually bought into this now much sooner here because it's taking into account what the Fed is doing. So it's not enough just to look at the price on the bond and the S&P. You have to understand what the Fed is doing. So take a look here on A to B. You see how much earlier you got in here? And so you got a much cleaner move there on this market. And then if you're looking at on the sell side here, like I said, it sold off at B into here. So then the next signal here is the buy signal. Now look at this one. So the old MACD bought here at C, this gold one here, and sold here. So it kind of bought a little, it got pretty early into the trend, but it still bought, it was already trending up, and then it actually sold off into here. So it had to decline a lot until it caught that movement up. And the reason why that it started acting wonky into here is because this is when the Fed started those big purchases. So now the price is getting really wonky into there, and you can't describe it with price. It doesn't work. So take a look at C to D on the Fed juice. Take a look here. This is C here on the Fed juice, and this is D when you got out here. So this is a much cleaner move into here on this trade here with the Fed juice, because this is picking up the fact that the Fed is scaling out. So when the Fed scales out, it's going to affect the bond price. So in other words, there's information there that you can't just get from open, high, low, close volume. It's not there in the bond, and it's not there in the S&P. And so this is I provide this service to the gold members, but I also put this in the newsletter. So take a look here on this last move here from E to F. You can see that the Fed juice actually caught this early into here, and it was able to catch this earlier where the MACD caught it late and it sold off late into here. So this is really exciting because now I have two symbols that are directly tracking the Fed. And when you got this wonkiness into here, when you got this sell-off into here, this little jog down into here is partly due to the reduction in their daily purchases. I mean, when you're going from $81 billion down to $31 billion, that's what this is. And so it doesn't matter what the MACD is saying because you have to take the Fed into account.
Hey, we have to pay a few bills, Shane. We'll be right back with Shane Smoley, the Wolf Trader, 877-927-6648. Stay tuned.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, talking with Shane Smolian. You want to continue, my friend?
Sure. So this is a graph of the S&P. So this is a daily chart that I post for subscribers on Twitter, on Wolf Trader 1. That's the gold member Twitter. And you can see here that the Fed juice went into this buy right around the 28th into here, and the market has been very stable into here. So I feel good about that. I mean, I'm happy to see that the Fed has stabilized this. And I think what the Fed is trying to do right now is just to keep this kind of stable until this economy can get back online. And then I think we got a good chance to recover here. But we got to get back online first. Now, we're coming into some Astro headwinds. One of the things that I've done in the newsletter this month is I've done the master signal. So that's in the newsletter. And I do a weekly video for the newsletter subscribers too. But the master signal combines all of the Astro together into one signal. And we're actually coming into some Astro headwinds into here. So this is kind of starting to flatten out a little bit, and it wouldn't surprise me to see us kind of drift around. But then later in the month, things turn much more bullish on this S&P. So the good news is that on this recent decline, when it tried to go lower, it held that low into there. So I feel good about this. And the main thing to remember is that we have to look at the Astro in relation to the Fed juice. So if the Fed juice is strong into here, the market's going to have a hard time going down. So we only want to be dealing with Astro that's in alignment with the Fed juice to gain an advantage. So that's the idea there. So right now the Fed juice is strong on this, and so that's just what I'm seeing right now. So there are some Astro headwinds, could stall us out, but the Fed juice is still looking good. So if that Fed juice turned lower than with the Astro, then you could start to see some selling. But right now it's pretty stubborn into that buy side on the Fed juice. This is the bond spread. You can see that the high quality here and the junk bond here, the spread is it's not as wide as it was here near the lows, but it's still relatively wide. So we'd like to see that spread come in for a bullish type of a signal. And this is the daily Fed juice. So this is one that I like to talk about because the Fed now is really starting. I think they're starting to win on this. And to me, a victory is just holding off any selling right now. But you can see that as they ramp this up, that the market's starting to hook up now with it. And that's a positive sign. That's what we want to see. And I only follow this. That's what I look at. You've got this external influence coming in all the time. So that's what you have to look at. Now, I've maintained this from the beginning, Larry, that we're still in a bull market. And the reason I say that is not because of technically we entered this bear market. Of course we did. I mean, we breached these levels. But I'm looking at this. And to me, that is telling me that we're still in a bull market. And there's every chance in the world that when this economy comes online, that this thing can recover. And I will just say we have a very good chance of a recovery. And I think this type of recovery can happen relatively quickly, because in the past, we've had these declines, and it's lasted for years and years. And if you're a student of history, XYZ happens. But the point is, this has never happened in the past history. So I only look at this. So that's what I look at. And the Fed is still strong. Now, from this Astro standpoint here, this is the planetary speed index, and it's been doing a pretty good job of modeling this. You can see that even before the decline, it was modeling these turning points into here on the market. And then, of course, it turned down with this dip. Now, it ran down into this last peak. And what happens is when you have these big declines, of course, it's going to go down into peaks too. But it rounded out here on this recent bottom, and I think it did a good job of that. And we're actually coming into a peak now into this. So that's why I think there's some Astro headwinds onto this market. So you've got the negative Astro fighting the Fed. And I think as long as the Fed can maintain its ground, I think it's a victory. I think, and the Fed found the pain threshold of the market. I mean, they were just throwing in money and money and money, and then they found, okay, that $81 billion number, that was the ticket. That was the one that actually stopped the selling in the market, and now they're down to the 31 billion per day, and so they're going to continue this QE. And when it recovers, you're going to have these Fed tailwinds going forward here. But in the short term, I think we have at least a couple of weeks here of, like I said, some headwinds on the market. Now, again, that doesn't mean the market's going to go down because the Fed juice has to be with the market. But it does mean that for us to see the biggest pickup in bullish behavior here, I think we're probably going to have to wait out until that period around the 19th of the month, somewhere out into there. And I give a much more detailed graph day to day on the Twitter for the gold members. And then the monthly newsletter subscribers also get that detailed master signal of that. But I'm really happy with the way this planetary speed index has held up. I think it's the best Astro indicator I've ever seen. It's the most reliable. And if you go back on the chart here, as I was showing here, you can see it with the black arrows into here, that it's just done a very good job at picking these broad-based turning points on the market. But again, you have to combine it with the Fed juice here. If you're not looking at the Fed juice with that, it's going to be tough, because when you have a strong Fed into there, we're not looking at the same situation here. Like the situation that we saw into here is not the same as this situation into here, because this is when the QE started into here. So we have to understand that. If we just look at price alone, it's not enough in this day and age. It's just not. I mean, there's too much going on behind the scenes, and that's just something to pay attention to. So this is a chart here, the relative strength of Apple versus the S&P. I like to look at this, and you can see during this whole decline into here that Apple did not decline nearly as much as the S&P. You can see Apple, if you went back to these lows into here, it didn't even want to get back into this August-September lows, where the S&P just completely plunged through those values into here. But Apple is getting a little weaker now relative to the S&P. So this would be, in alignment with that we could have some type of a stall out here in the next couple of weeks on the S&P. And then this is one here that I like to watch. This is JP Morgan versus the S&P. So this is important because when you look back here into 2020, you can see that the banks were getting weak already in relation to the S&P. So this is back in January. They were already getting weak. So this is in some ways, this was probably telegraphing the corona issues here. But when the banks are weak relative to the S&P, that's not a good sign. And then we got a couple of spikes into here. This spike into here in late February, and then this was the QE spike into here when we got that shot in the arm from the Fed. And now it has dipped back down below again this average. So that's, to me, that's saying there could be some short-term weakness coming in here. I would like to see the banks, and I would like to see those tech giants to be leading to the upside. So, I mean, I don't think it's anything dire, but definitely probably some headwinds here coming up in the next couple of weeks. So.
Well, that's really good stuff. I'll tell you, I love that planetary index because, that's something that George Baer worked on, and he was one of the real magicians of the 20s, 30s, and 40s, and I actually met his daughter once before. We have one other question, Shane. We've got a break coming up here where I'd like for you to tell the folks how they could reach you and the services that you have. But the work that you're doing with Alfie, is it working out the way that you thought it would?
Oh yeah, Alfie always solves the problem. I mean, no matter what problem no matter what I ask him, like he figures it out. Like I asked him, the thing that I wanted to do was to plot the midpoint of that aspect to figure out when the market's going to go up and down. We'll talk about that after the break.
Okay, 877-927-6648. We'll be right back, folks. Shane Smoley, Wolf Trader.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Shane Smoley. And Shane, you want to tell the folks about some of the services that you have?
Sure. So you can go to the website, and there's you go to the free member login, and you can get a free account, and then you get on that email list, and I'll be able to send you updates on the email list. But then there's the newsletter service. Now, all of these services have a 7-day trial, so you could try it out 7 days. You don't like it, go away. But that newsletter, I'm telling you right now, I think everyone out there should be a subscriber. It's $39, and I packed that full of information about the S&P 500, and everything Astro that you want to know is there for these markets. So, and then I give a video once a week. I think that's a really good value. I mean, for what you're getting for that newsletter, it's a very good place to start. 7 days, you don't like it, you can keep the newsletter, log on, it's yours, keep it, that's fine. But I think you're going to like it. I think you're going to stay with the newsletter if you subscribe to that. And the gold member service too, this is a good one. We cover daily on Twitter. It's like a daily newsletter, but it's posted on Twitter, and we cover 10 markets And we're also going to start covering 11 now. I covered copper, silver, gold, corn, natural gas, oil, pound, euro, bond, S&P, and then now we're going to start to cover platinum in the coming days. So that's a good one too. If you want a daily type of a service, that's good. Also, if you're signing up on the free membership, sign up for the Wix chat. What that is that's an app on your phone and you can chat me directly. So if you have questions, I can respond to you like within seconds. It's pretty cool because if you email me, it could take me a few hours or sometime a day to respond. But if you chat me a question, I can respond very quickly to that. So that's a really cool technology for everybody. So make sure you sign up for the Wix app. And again, there's also a free Twitter at WolfTrader FUTU1. But I think this is, I'm really happy with the service right now. I think we're providing a good service to everybody who subscribes to this newsletter. And it's, like I said, for $39, that's a lot of information to get every month. So if you have any questions, you can email me, Shane@wolftraderfutures.com, or just get on that free subscriber list and chat me up on Wix. And I think we're going to do a Zoom session. I think some people wanted to do a meetup on Zoom, which is kind of like a webinar, but on a Zoom, I'd do a Zoom and walk people through the services. So let's talk,
great.
Everybody.
Hey, thank you very much, my friend, and be safe, and may God bless. Live every day in an attitude of gratitude. Yeah, an attitude of gratitude, and may God bless.